Welcome back to Investing Talk Podcast.
Today we're looking at NuScale Power.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. For a long time, advanced nuclear, especially SMRs, felt like more of an academic discussion.
Yeah, something that was always 10 years away.
Exactly. But what we're seeing now is this collision. You have this long-term tech story suddenly hitting massive deployment contracts and, maybe most importantly, getting the full regulatory green light.
And that's really the core of it. We need to break down what's been happening lately, all the news and catalysts, so you can really get a handle on the risk and reward here. This is, essential if you want to understand how these huge capital and intensive energy companies actually finance their future.
And how they navigate those bureaucratic mazes that can just crush smaller companies. That's where the real advantage starts.
So let's start right there with that competitive advantage. Because with NuScale, it really all comes down to the regulators, doesn't it?
It really does. They got accelerated approval from the U.S. Nuclear Regulatory Commission, the NRC, for their standard design. And I know that sounds technical, but it's a seismic event for the industry.
A huge deal. So what does that actually unlock for them?
Well, think of that NRC approval less like a permit and more like a competitive firewall, a regulatory moat, as people call it.
Right.
It means the NRC has already signed off on the core design. The fundamental safety stuff is done. So any utility that wants to use a NuScale reactor doesn't have to go through that, decade-long, multi-billion-dollar process all over again.
They just need to get the site-specific permits.
Precisely. Meanwhile, all their competitors are still years away from that milestone, still trying to get their basic designs approved. This first-mover advantage just gives them incredible credibility.
And that credibility immediately turned into massive contracts. We saw it in August 2025, that landmark deal with Entrée1 Energy and the Tennessee Valley Authority.
The TVA deal. Yeah, and this isn't some small pilot program. It's the largest SMR deployment in U.S. history. We're talking about a 6-gigawatt program.
6 gigawatts is. Put that in perspective.
It's enough carbon-free baseload power for millions of homes. It's the equivalent of several massive conventional nuclear plants. This is a real deployment initiative. It shows deep institutional buy-in.
And then just 2 months later, they doubled down. In October, Entrée1 named NuScale their exclusive global strategic partner.
In a deal worth up to $25 billion.
Yeah.
Now, that $25 billion, that's the potential value over a long time. The real key here is that it cements NuScale as the go-to partner in the U.S. It just blows up their order book.
Okay, so massive contracts, huge regulatory win. But we have to balance that excitement with the financial reality of a company like this. It takes a ton of money to get these things off the ground.
Exactly. And when you dig into the financials, you see that story playing out. On the one hand, you have really strong revenue growth, much faster than a lot of their clean energy peers.
Driven by that expanding order book.
Right. And the forecasts from analysts reflect that. They're frankly explosive. The consensus is for about a 22.9% compound annual growth rate through 2026.
Which is already very strong.
But some of the more, shall we say, optimistic scenarios project that growth could spike as high as 207% in 2026 alone.
A 207% spike. Okay. That has to come with a huge caveat, right?
Yeah.
That only happens if they execute flawlessly on these new contracts.
Absolutely. High risk, high reward. But supporting that growth is a very, very strong balance sheet. They've got a robust cash position and, importantly, very low debt levels.
Which is so critical for a business that's basically in the heavy manufacturing game. It gives them flexibility.
It does. Flexibility to fund R&D and scale up without having to immediately run back to the market for more capital and dilute the shares.
But then there's the flip side of that coin, which is the profit margin. With all that investment in R&D and plant development, the margins have got to be under a lot of pressure.
They are. And this is where the term operating leverage becomes so important. Right now, their fixed costs are huge, that R&D, setting up manufacturing.
All the expensive stuff.
And the initial sales volume is still relatively low. That's why we're seeing negative earnings per share. And we should expect that in the near term.
So the negative EPS isn't a sign the business is failing. It's a sign that it's reinvesting heavily to hit a much bigger scale.
Correct. Management is banking on that operating leverage, kicking in hard as they scale up, probably starting late 2025 and into 2026. Once they can start churning out these standardized modules, the cost per unit drops and the margins should expand really fast.
Let's shift to the immediate future then.
Yeah.
What are the key drivers to watch over the next, say, 3 months?
Okay, so this period is all about seeing things become real. On November 30th, we have the Entray 1 project groundbreaking. That's not a press release, that's moving dirt. It tells the market the capital is starting to be spent.
Then in mid-December, we get a look at what the big money is doing. The institutional 13F filings. For anyone who doesn't track these, why do they matter so much right now?
Because these filings will show us if the big, sophisticated funds, the hedge funds, the mutual funds, piled into the stock after those huge contract announcements in August and October. If they took large positions, it's a powerful vote of confidence in the long-term story.
A big validation.
Yeah.
And right after that, in late December,
The Clean Energy ETF rebalancing, another high-visibility event. If NuScale's performance and market cap have gone up, these big ETFs are basically forced to buy large blocks of the stock to match their index. It creates automatic buying pressure.
and of course the big one is earnings season.
February 6th, 2026, the Q4 earnings release. That's when we'll see how much of that massive contract backlog is officially on the books. And you can bet analysts will be pressing management for a clear timeline on that operating leverage.
Beyond those scheduled events, what about the rumors? What's the chatter moving the stock?
There's persistent talk about international partnerships. We're hearing about potential deals in Asia and Europe, places that are desperate for reliable, carbon-free power. That NRC approval carries a lot of weight globally.
And on the domestic front?
Speculation about more grants from the Department of Energy early next year. But the most interesting rumor is about privatization, the idea that a huge energy conglomerate might see it as cheaper and faster to just buy NuScale outright rather than try to build their own SMR division from scratch.
That's a compelling thought. So let's wrap this up with a look at the technicals and the overall picture. The stock's had a strong reversal. It's trading around 37.50 right now. What are the charts telling us?
The technicals are pretty supportive. The price is above both the 50-day and 200-day moving averages, which is a classic bullish sign for both the medium and long term. And momentum indicators like the MESI-D are positive, which confirms their strong buying pressure.
And the analyst price targets reflect that optimism.
They're aggressive. The average is in the high 30s to low 40s, but the highest target out there is $60. From current levels, that's, over 160%? Potential upside?
It's huge. But let's ground ourselves in reality here. What are the top two risks you have to be monitoring?
Number one is pure execution risk. Building and deploying nuclear hardware is incredibly complex. The whole story hinges on them delivering these projects on time and on budget. Any serious delay could really hurt sentiment.
And the second risk is tied right into that, cost overruns.
Yep. Scaling up the specialized supply chain for these reactors is a major challenge. You have to watch cost controls like a hawk. If the supply chain can't handle the scale, costs could balloon and eat into those future margins before they even appear.
So to pull it all together, NuScale seems exceptionally well positioned. They have the regulatory moat, they have the landmark deals, and a whole string of potential catalysts just in the next few months.
Which leads to the final provocative thought you should be considering. With this overwhelming global need for carbon-free baseload power, and with NuScale's huge head start, how likely is it that those rumors about a buyout accelerate? Could this company's ownership structure completely change? Could they be acquired before their first big reactor even comes online? That's the high-stakes game being played right now.